All right, everybody. Happy Monday. Kobra Trading here, back again for another Bitcoin analysis. As you can see, the atmosphere has kind of changed a little bit. I just got into a new office. I got my lighting all set up. I know that the walls behind me are still a little bare, so if you know anybody that does blockchain art, crypto art, or anything related to that kind of stuff, or just cool artwork in general, like movies, stuff like that, video games, anything, I would love to feature some artwork on these walls behind me so that it doesn't look so boring and plain. But with that said, I'm really excited about the new filming space. I still got to get a little bit more furniture in here and stuff so I can kind of change it up a little bit. I'm going to throw a whiteboard up on one of the walls for teaching you guys and better explaining, tutorials and stuff like that in the future. So without further ado, it is Monday. It's about noon here on the East Coast. So the weekly candle just closed yesterday. So let's go ahead and get into the charts right after this. All right, welcome back. So taking a look here at the weekly chart, the weekly candle just closed. And what do you guys see? Because I see a doji here. This looks like a dragonfly doji to me, which is pretty bullish. Right now we're starting the week off a little bit to the downside here, but it's nothing really too serious yet. As I mentioned in my last video, this whole sequence here just looks very similar to this whole sequence, and this looks very similar to what happened last November and stuff. So it looks like we capitulated now, and we're probably going to be bouncing around here on the quote unquote bottom for probably quite some time if history repeats itself before we make our next move. But this is a historical move here. This has happened before every single bull run. There's a lot of charts that are coming out now, especially on Twitter and stuff, that explain that. And it is very true. We end up, hitting our 618 and then, retracing off the 382 before our next bull run. And that's looking like what might end up happening here. On the weekly chart with the Ichimoku cloud, we're definitely inside of the cloud right now and using this 50 EMA with this purple line as very strong support now, which is a good sign. However, the Kinjinsen line, this red line right here, is acting as very strong resistance. So, if we can make it past this, and the next resistance up at about 10,300, which is quite a ways off for right now, then we will be looking very, very, very strong. Just any break of this in general would be a very, very good thing. So we'll be keeping a close eye on that. On the daily chart here, let's see. What are the indicators telling us? So even with this last pump that we just had yesterday, the oscillator here, my awesome oscillator, is actually still to the downside. However, it is looking a lot more bullish than it was before. In here, it was kind of neither here nor there. We kept getting these, these white bars, which is like more bearish volume and stuff. We had two in a row right here when we were making our way down. But now it's starting to flip over. The bearish volume is starting to decrease, obviously, as you can see over time. So hopefully we continue this momentum and break through the Kinjinsen line, this blue line here on the daily chart, to start coming up and retesting our 200 moving average, which is right now sitting about 86.40. So if we can do that, that's definitely going to be a very strong bullish move. And we still have our MFI sitting right about in the center here. So this is definitely a really healthy area to be. It didn't end up becoming overbought on the higher time frames with that kind of a move, which is very good. So let's go ahead and take a look at our 4-hour chart and see what the 4-hour chart Ichimoku tells us. On the 4-hour, we've actually already switched over to being bullish on our oscillator, which is very good. But again, this pump here, we didn't really see it get up into this overbought territory above 80, which is really good. We are holding these levels and it looks like it's correcting pretty nicely. So that's also very, very good. We were using our 100 EMA on the 4-hour chart actually as our resistance here, and it looks like we're actually going to be using our Kinjinsen as support. So the cloud right here is kind of indecisive right here. We turned green for a little bit, we turned back to very red, and we got this very, very thin red zone, and then we switched over to green and literally just got one line of green. I don't even know if you guys can see that. To try and zoom in and catch that. Then we got like this one little line of green, and then bam, we switched over to being red again. So we do have a very significant red cloud hanging over us right now, but on the 4-hour chart, this is not very serious. And if this breaks, then we would be looking in the midterm to be using the top of this red cloud as support if we can keep moving up from here. A test of the 200 MA on the 4-hour chart would be a healthy test of about the $8,600 level, and I think that that's pretty much right where we want to be. That lines up with resistance up here from our previous highs and stuff, and that's really what we want. You know, in my last video, I was saying that, you know, we've been getting these, we've been getting all of these lower, higher lows rather. Turn that off. We've been getting all these higher lows. So we had a low here, we had a higher low here, we had a higher low here. Even though this did violate this trend line, we didn't get a close below it. I had a lot of people DMing me asking that, well, you know, the trend line was violated. It's like, well, yeah, it was violated, but you know, you can violate a trend line with 1 or 2 wicks as long as you don't get a close below that that trend line. Then it doesn't really matter. And then I was getting questions asking, well, then shouldn't you be mapping it from the candle bodies and stuff? And the answer to that, I say, is no, because I've always done it with candle wicks, how I draw trend lines. So if the you know, if we end up wicking below it, but then we hold above it, and we tested it again here twice actually, and held this very nicely before we had this nice run up. So, you know, in my opinion, that's a no. I mean, trend lines get violated all the time. Parallel channels get busted through with wicks. It happens all the time. We see it constantly. So I say no to that. Anyway, looking on this 4-hour chart with all my counts and stuff like that, the reason why we ended up making a pretty decent call in our group is we noticed this really big bullish divergence here on the MFI as well as the price action, right? So we got a lower low in the price action, but we were getting higher highs on the RSI and the MFI indicators, which is really, really good. You know, that's a good indicator that there's probably going to be a reversal soon. So we made an entry here on this candle, and we longed this whole thing for a pretty nice profit. It looks like my Elliott wave count here is going to end up being changed. For right now, this is going to be our third wave, which would lead us to correct down to about the 8,000 level, 8,050, just inside of our wave 1 territory, but no big deal there. However, if we do keep moving up from here, if we just go sideways and we keep moving up, then we could be looking at something like this, where we get an extended third wave to test this top channel line that I have, this red dashed line here, which is also our 618 of this entire last move from our low to our high, or rather from our high to our low here. So that would be a very healthy move. If something like that ended up happening, then I would expect a retrace down here. You know, in a perfect world, we would retrace a fourth wave between 382 and the 0.5. So knowing Bitcoin, it normally goes a little deeper than that. So probably about 8150 or so, somewhere around there. And then we would be heading up for, we would be heading up for a fifth wave, which at that time, if it wasn't extended, would probably leave us right around the $8,700 mark. But what we really want to be shooting for is anything above this last high right here. We really want to make a third in a row. You know, we want to go for a third in a row higher high, right? So we had a high here, then we had, let me just explain this again real quick. We had a low, then we had a high, then we had a higher low, then we had a higher high. Now we've had a third higher low, and we're looking for a third higher high here, right, to get a confirmation of a trend change. So we definitely want to break this, even if it's just by $1 or $2. Technically, that would still be valid, but by Elliott wave rules and stuff, you know, this is pretty much where our fifth wave would land us, is in this territory. So I'm pretty confident about this move. Hopefully, we end up getting an extended third, and we're able to push higher. But right now, the longs and the shorts on the order books and stuff, they're looking pretty even right now. There's a lot of people that are trying to short this. We actually ended up just getting some long liquidations, which is what's pushing the price a little lower here on our 4-hour chart. But again, it's really nothing all of that serious. So that's pretty much where we stand right now with that. If we actually take a look here, this divergence. Yeah, this was divergence here as well. We ended up getting 3 sequential higher lows here, and on the RSI, and 3 sequential lower highs on the price action, and we ended up longing this a while back too. Anyway, so if we take a look at the daily chart, I know that I was also catching a lot of shit in my DMs for calling the bottom and stuff like that. People call bottoms and tops all the time, so I don't really give a shit about what the haters have to say. But anyway, I am calling this probably that the bottom is in here. We've been getting sequential higher lows. We've been getting sequential higher highs, which is very, very good. So coming off of a downtrend, you know, we've kind of got this like expanding scenario here. I mean, that's pretty positive to me. It seems to me like we should be moving up. And as I mentioned back, the last time that we saw this kind of price action was way back here. And we ended up getting, with our whole scenario here, you can see how similar this looks, especially on these 4-hour charts. With our drop, you know, we had a 1, 2, and then we went for a deep 3 and 4 and 5. And this fifth wave, sorry, wrong count. It's the count of the higher degree. We had our 1, 2, and a really long extended third, and then we had a 4 and a 5. And this 5 was, if you take a look here, let me turn my magnet off real quick. If you take a look at this, this fifth wave was truncated here before we started our next sequence up, and that was what had ended the entire this entire count before our next bull run up. So that's basically what I'm proposing here. The same thing that's happening is I'm proposing that this entire correction from our wave 1 would be a WXY with a 333 correction inside of it, and that this C wave is now done. And this 5-wave sequence that shows on my 4-hour time frame here would be completed now. So this would be our 5th wave here, and this is over. And this 5th wave is truncated before the 3rd wave. It ends before the end of the 3rd wave. So that means that this would be truncated. And that is the same exact thing that happened last year. So that's why I really think that our bottom is in. Don't quote me on this. Obviously, we could get rejected here and we could dump really hard and go deeper. But as of right now, with how much support we've gained and how much longs are now on the order books in this territory, that we've reclaimed $8,000 and $8,100, and we've been testing 82 multiple times now. There's a lot of you know, distribution up here, which is pushing us back down from 8,200, but we've tested that level and into the 8,300s 3 or 4 times now. So once we can get above and hold this level so that we're back up in the top of this, you know, sideways channel here that we have, once we're back up into the top of this, it would be very, very good signs, because we had no issues breaking through this before. So we should be able to do it again. And as I've said, we've tested this 1, 2, 3, you know, 4, 5, you know, times now. Every single time that you test support and resistance, they get weaker, right? So I think that the next time that we end up testing these levels up into the $8,500 range, we're probably going to blow right out of it, and we're going to end up seeing a move probably up into the 9,000s or 9,100 area, which would be nice. That would be really nice 5th wave. We would break and make confirmed a 3rd confirmed higher high here, and that would be extremely bullish. So for right now, that's pretty much all I got for you. On the lower time frames here, if we take a look at the hour chart, we can see that the MFI is correcting from being overbought off of that huge move that we had. So there's not really any surprise there. We're coming back down into you know, kind of close to being in the oversold territory just off of this one candle. So that's actually a pretty positive sign to me. That's something that I like to see off of a really solid move like this, is a really good correction, so that we can really start moving our way up here. The reason why I think that this count right here is valid is sometimes in the middle of a 3rd wave, we do end up seeing you know, some like kind of sideways movement before we continue and push higher, if it does end up being an extended 3rd wave. So I'm going to be keeping an eye on this very, very closely here to see what happens over this next week. So we can also see that our bullish momentum here on our oscillator was starting to decrease, but we haven't gotten into the bearish zone yet. So what I'm thinking is going to happen is it's probably going to level out right to just about the 0 line, and then we're going to make our next wave up. So on the even smaller time frames, for you scalpers out there, on the 15-minute time frames, this looks really choppy to me. I would just completely ignore this on the 15-minute chart. I normally don't use these indicators for scalping, but on the 15-minute chart, we've basically just been going sideways right here. So and trying to correct, we've got a lot of support down here between anywhere between, I guess, 8,000 it would be around these candles down here, about 8,000, all the way up to where we are now at about $8,200. The bulls are doing everything they can to hold 8,200 so that we can make our move higher. If we lose 8,200, then I would assume that we're probably going to end up, this would be our third wave, and that we're going to end up probably correcting down to just above 8,000, probably the $8,100 level, and lose about $100 or $150 before we make our next move up, so that the bulls can regroup. Right now, this is kind of a crappy area to be scalping in. I wouldn't really be scalping off of this. We just had this huge stop hunt candle here, so all the stops and stuff like that for shorts and for longs and stuff, they were getting hunted on each side, and now it's just kind of leveling off. So this is kind of an awkward area to be scalping in, but there is bullish signs here with these long wicks down. That's really bullish. We've got a lot of support here, and we're getting a couple bullish hammers on the 50 chart, so that's always really good. That's pretty much all I have for you today. I wish you guys all a happy Monday, and as usual, trade safe.